Let's take a look at what's going on with Dogecoin. Okay, so I'm mainly, and I have been looking mainly at the 9 moving average on the weekly time frame in my last couple weeks probably. We have this blue line right here, the 9 moving average on the weekly time frame. I'm on Dogecoin weekly time frame, and I've been talking about how when we break below the weekly or when we break below the 9 moving average, this blue line in general, then it's in a bad position. We come up to it, test it, test it, test it, and if we don't break through it, like if we don't close the candle above it, then we're gonna get or its resistance. It acts as resistance. Boom, boom, boom. Testing it, testing it, testing it. We did spike above it, but we didn't close the candle above it. You could see right here that all these candles closed below this 9 moving average, this blue line. So when we break below it, then that's a bad sign basically, and we come up, test it. If we can't break through it and close above it, then it pushes us down, and that's what happened. We got pushed down. This was, I don't know, when was it, like in December. We've been getting pushed down ever since then. What I'm waiting for is for us to break back above the 9 moving average like we did over here. We had a falling wedge last year pretty much, and then we broke the falling wedge. We closed these candles above the 9 moving average, that blue line. Boom. Broke it right here, closed above it over here, started testing it to the downside. It was starting to act as support. We're bouncing on it as support. Then we started bouncing to the upside, and that's when we really got some good moves. I've been talking about how I want to see what I've kind of been skeptical, or not skeptical on, but I've been kind of thinking is that we need to go sideways for a while, let the 9 moving average come up and catch up to us, then we can ease into it, kind of like we did over here. We kind of went sideways for a while. 9 moving average came down, got really close, then we were able to ease into it. We broke above it, and then we closed above it, tested on it, and then broke to the, or like really got a nice move to the upside. Same with over here. I've been thinking, like, are we gonna, hopefully we can go sideways for a while, so that way the 9 moving average can come down. We can kind of slide sideways into it, and then close above it, and then maybe start testing on it and get support on it and start pushing to the upside, because we had a falling wedge recently that I'll draw out real quick. I still have a limit order at 10 cents just because we broke the 78% level, the Fibonacci retracement level. I talk about this all the time. We had a big run, so I got the Fibonacci retracement tool. I drug from the bottom of the run to the top of the run, and I've been dollar cost averaging in at these levels. So and the thing about it is, when we break one of them going to the downside, I look at the next one as a potential target. And like I said, we broke that 78% level, and we've been heading down. So I do have a limit order at 10 cents. I don't know how confident I am about it, really, but I just have it there just in case. Then I'm also looking at these orange lines too. Let me finish with the weekly 9 moving average real quick. Okay, so I want the weekly 9 moving average to, I think I already covered that. Go down, ease into it, start getting support on it, and then push to the upside. I think the weekly 9 moving average is like one of the most important ones. All right, so let's switch over the daily time frame and talk about some of these other orange lines and the falling wedge and stuff like that. So we were coming down, and I was saying that these orange lines might give us some support, because right here we found support at the bodies on the daily time frame, and then we wicked all the way down here. These two levels are at 153. Actually, let's be more specific. 15378 and 1423. This is on Binance, Dogecoin, and Tether, so it could look different on different charts. But those are the two lines that I was kind of skeptic. What do you call it? Skeptic? I don't know. Anyways, I was thinking that it might come down and we might get support on those two levels. We pretty much came down. We pretty much got support on that wick down here. This previous wick came down, found support, got a nice little bounce to the upside, but we also wicked further. So we got a lower low, something like that. So I don't know if this is over yet, really. The other thing I wanted to talk about is the 9 moving average on the daily time frame. This is like kind of could be a little clue on same thing. If we break above it, like right here, we got a nice move to the upside. But when we break below it, like right here, then we come up to it, get we test it, and if we can't break through it, like I was talking about, close above it, then it's potentially gonna act as resistance and continue to push us down. Right here, let's take a look at this blue line. What's happening right now? It looks like we're testing it. Looks like we tested it yesterday's candle. Today, kind of testing it still, but it looks like we're getting a red candle and we might be getting rejected on it. So that's why I was kind of wondering. I mean, that's why I'm kind of thinking that there might be some more blood in the water, but I don't know. Maybe we'll hold support at these two orange lines or somewhere around here, and be able to go sideways for a while. Let that weekly 9 moving average come in, go sideways, and hit it going to the upside. And the other thing I've been talking about is the falling wedge that I don't have on my chart right now, but let's go ahead and draw it out. I was looking at something like this. Was it like that? I don't even remember. Let me see. And then something like this. Basically, we had resistance, a resistance line, and then a support, something like that. Let me go ahead and readjust this because this was more something like this. And I think this was actually something more like this, because this point and this point was what I was really looking at. But so we had this resistance and we broke that resistance. We were looking at a falling wedge pattern, basically lower highs, lower lows, and then bouncing in between those two lines, getting tighter and tighter. We broke right here, going to the upside. But right here, I was talking about how it's kind of happened back here where we had a falling wedge, tighter and tighter. We broke above it, got rejected, came down, and had to go sideways for a while. And that's why I've been thinking we might have to go sideways for a while before we can really start breaking to the upside. But I think this might have been a good sign. You know, it's not. We came up and then it started coming down, but we did that back here too. We broke that resistance, came up, came down, went sideways for a while, and then we really started to take off. So I'm not saying that's going to happen for sure. Like I said, I still have I still have a limit order at 10 cents, but that's why I'm not really super confident on it though, because I'm wondering if we're gonna like hold here, go sideways for a while, and then let the moving average catch up and really get support on it and start pushing it on the moving average on the weekly. Excuse me. Right now we're on the daily. Excuse me, and we broke below the 9 moving average right here. Resistance, 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 resistance. Testing it right now, but we're not breaking above it quite yet. And like I said, the weekly is more important, but the daily might give us a clue that we might be doing better. If we can break above first we have to break above, like, I mean, technically we have to go to the 1 hour and break above that, and then the 4 hour, and so on. So like right here, broke above on the 1 hour, but we're underneath even the 1 hour right now. If we go to the 4 hour, let's see what that looks like. On the 4 hour, we actually did break above it right here and right here, but see how it kind of is going like in and out, and it's not like perfect like the weekly. Like if you go to the weekly, it's like very, very clear that, let's zoom out a little bit. It's very clear that it's like acting as support and resistance. Like back here, support all in this area, clearly above it, and then right here when we broke below it, clearly resistance, clearly below it, clearly acting as resistance, pushing us to the downside. So back to like my point, like let's go to the 4 hour time frame. Like I was saying, this could give us a clue, but it's not going to be as powerful as like the bigger time frames. Like right here, it's kind of going in and out of it. Like we broke above it right here, broke back below it right here, broke above it right here. So when it's doing something like that, when it's going like in and out, or above it and then below it and then above it and below it, we go to the next time frame up, and then see like this one's a little more clear than the 4 hour, where we broke below right here, resistance, 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 pushing us down. But it's even this one's not as clear as that weekly, where right here we broke above it, couldn't stay above it, broke back below it, etc. But it could be still a clue. And the daily time frame, 9 moving average is I don't. I mean, it's not. I really like looking at this 9 moving average on the daily time frame. I think it's a good indicator. But like I said, the weekly is a lot more clear right now. It seems like. So yeah, below the 9 moving average on the daily. So this we're and technically we're in a bad, not a good position. You know what I mean? It seems like we're testing that 9 moving average right here. Like we're really close to it and testing it, trying to break through it, but we're not closing above. We're not making candle. We're not closing these candles above the 9 moving average right now. So not a great position. I mean, this right here is getting me a little bit more confident on this area. Not I don't know if we're gonna go down this far though. You know what I mean? Like that's what I was saying. Like on the weekly, hopefully we just kind of go sideways, maybe even do something like this. But yeah, I just have it here. I just have that limit order, just in case that we do like if to buy right here, just in case we do continue to go down. What else? So we broke that resistance going to the upside right here. I think that might have been a tech better than just continuing to stay on. Like I'm on the daily time frame, we had resistance. We broke that resistance right here, but we're kind of going sideways. But it's better than us just getting rejected right here and pushing down more. So I think this might have been a decent signal. Maybe things will start to change ever since we've kind of had this little mini bear market. We had this nice run, had trouble breaking higher. We had a little trend right here. We broke that trend going to the downside, and ever since then, that's when I did the Fibonacci retracement from the bottom to the top, and then had these levels that I've been watching and dollar cost averaging in on. Actually, not this one, but this one down here. That's why the next point of dollar cost averaging for me, just like a limit order, is down here at 10 cents, because this is the bottom of the run, basically the like 0% Fibonacci retracement level. So what else was I looking at? If you go to the 4-hour time frame, we have some trends too. We have like a trend right here, kind of. So we have resistance. These 2 points didn't come touch perfectly. I guess you could argue that if you really want to do this trend line, it'd be something like this. We broke above it though, kind of testing it right now, but we did get resistance right there. That's why I kind of adjusted it something like that, where I'm looking at that resistance and this resistance. If we break above this resistance, then maybe we can start getting bullish again. I would be looking at .185, .183, somewhere around there, because that is that 78% level. Because these Fibonacci retracement levels, they not only act as support sometimes, like back here where we got support on it, got a nice bounce, came down, got support on it, and bounced to the upside, but they also act as resistance once you break below it, kind of like the 9 moving average. You know what I mean? When we break below it, then it might act as resistance. It broke above it right here, and at this point when it started breaking above it, I started looking at the next one up, but broke back below it, so kind of an area of resistance. But anyways, if we break this trend line going to the upside, this might give us some trouble, but if we could break above that, then we could start looking at the next ones going up. The next one is .248. That's what I was looking at when we broke above over here, but it didn't happen. We got rejected and started heading down again. So, and like I was saying, I've been talking about this, is that we probably have to go sideways before we can break that weekly 9 moving average to break back above it. But this could be also another sign, like if we break this resistance, maybe that will be a sign that we might be changing directions. And then we'd have to break this level right here going to the upside. These are just kind of things that I look at. Like if we break this level, then maybe we can start getting more confident on this level. And if we break this level, then maybe we can start getting more confident on this level. Since we are in a downtrend, since we broke that Fibonacci retracement going down, I'm a little more confident on this level. But if we break this trend going up, or if we start getting above the 9 moving average on the daily time frame, let's go back to the daily. If we break above this, then that'll give us more confidence on whether we're going up or down, and that's kind of what I'm trying to show you guys. So yeah, kind of looking at these orange levels as well. Let's see if we can hold on those and then break to the upside. Like I was saying, back here is where I got these levels from. So when we're going down, I like looking at the past and seeing where are the previous supports. Even right here, we got support right there. Got a bounce right at that bottom line. So we had this support and then this support, and then we got a little bit more support over here. I'm not saying that this is for sure going to hold and we're going to break up, but this is just kind of stuff that if we start breaking them again, then we can start getting more confident on the next level going to the downside, which is the 0% Fibonacci retracement level, which is what I've been kind of looking at ever since we broke below the 78 down here. Let's see if we could come down here or if we just go sideways. I don't really care either way, cheaper Dogecoin, or we could start running again. I don't care either way. That's why I like playing off these different levels. It's like you could take emotion out of it. Let's see what else. I guess you can argue that we have a bottom right here and a bottom right here. So we're kind of in a triangle pattern, if you want to call it that, where we're getting higher. This is a smaller time frame, but on the 4-hour time frame, we're getting higher lows and then lower highs. Triangle pattern. We're waiting for a breakout to the upside or to the downside. These patterns, like I said, basically give you a clue if we're breaking up or if we're breaking down. Let me do that again, because we're getting, like I said, we're getting higher lows, lower highs. If we break one of these lines going to the upside or to the downside, that'll give us a better clue which direction we're going to go as well, even on these smaller time frames. So that's about it, what I'm looking at. Let me know what you guys are thinking, though. If you guys like this video, hit that thumbs up. If you are not subscribed, hit the subscribe button. If you want to watch the last video, check it out right here. If you're new to trading, check out this playlist right here. I think that's about it. I'll see you guys in the next one.